Hello and welcome to a special 2-hour edition of Your Money, Your Call. I'm Kim Slater from Kimber Capital. If you have a question about shares, our phone lines are open on 1300 30 34 35, or if you prefer, you can email us at yourmoney@skynews.com.au. Tonight I'm joined by Michael Gable from Novus Capital and Mike the Heffernan from Longsec. Welcome to the program, gentlemen.
Now, good to be here, Kim.
Michael, we're going to have to distinguish the two. Well, we need a nickname for Michael Gable, so if any viewers have got one, ring in with a good one.
Don't know if we can beat the Hef, but
it can't beat the Hef.
There we go.
Hard to beat the Hef. Gentlemen, first of all, we kicked off the US corporate reporting season last night. Alcoa came in with its quarterly earning forecast right on the button of 6 cents a share. So, you know, the market, the Dow didn't take much heart from it, but we're up 18 points today. We had iron ore prices hitting a 15-month high. But we had the November retail sales figures out, and they were down. Whatever, I don't know what Jerry Harvey's going to do next, but he must be pulling his hair out. The Australian dollar remains persistently high, and we, you know, generally have fully priced stock valuations. Although you would disagree with me on that. So effectively, a bit of a witch's brew in the market of hope, trouble, and strife. And the point is, you know, what can actually go right with this market, given the fact that, you know, we're 4 weeks away from the US debt ceiling. I think it's a very one of the most difficult starts to a market I've seen in a long time. So I'd like to get your views, Hef.
Yeah. I'm just having a bit of issue here.
Oh, okay.
Look, actually, I think the market looks pretty good, Kim. I don't think I'd agree with your summation there of the key factors. I mean, my view of this market at the moment is that you've got Europe starting to be, as I describe it, on the way to being neutralised. You've got the American economy continuing to improve bit by bit, 2 steps forward, 1 step back. As far as Asia is concerned, I think you've got steady growth now. China seems to be stabilising at a GDP growth rate of around about 7 to 8%. That's great. It's not 10%, but it's a lot better than it has been. A lot better than it has been the latter part of last year. Not as good as the 10%, but still very good. And the rest of Southeast Asia is doing well. And then here, we've got interest rate cuts coming up, as I would see it, in the next couple of months. So when you wrap all that up together, with the icing on the cake with the election later on this year, which I think no matter which way it goes is going to be positive for the market, I think you've got a cocktail that's looking pretty good for the market. And golly, Kim, I mean,
I think it's one of those methanol cocktails, Hef. You know, it might look good in the glass, but you drink it and it could damn well kill you.
Well, I don't think it's methanol at all. I'd say it's more like a gin and tonic, frankly. And I think it's looking pretty good. And I don't get downcast about these things at all. And you touched on the American. I'm sorry to keep going on here, Kim. But
that's all right. You
touched on the American reporting season. What I gather from the commentators or the analysts is that they expect earnings growth of only around about 2.4%. I think in this particular quarter, the December quarter. Yep. I mean that's not too bad actually. And as long
when you annualise that out, it's a very good growth rate.
Yeah, it is. Well, it is, and you know, it's going in the right direction. And as long as expectations aren't too high, there's a good chance that the companies will come in with something a little bit better than that. And I think that's going to be very positive, in fact, for the reporting season in the US. So wrap it all up. I reckon it's looking pretty good, Kim.